The following is a presentation of TFNN. Live at TFNN, here's Breakout Investing with your host, Ken Shreve.
Okay, good afternoon, everyone. Welcome to another edition of Breakout Investing with Ken Shreve. My name is Ken Shreve, of course. Very warm, sunny day in Southern California here. Also a great day for the market taking shape as well. So let's take a look and see where we're at. The Dow is up 122 points, 1% to 12,203. The NASDAQ outperforming nicely today, up 56 points, 2.13% to 2685, and the S&P 500 up 18 points, 1.4% to 1296. Today is Tuesday. That means the latest weekly update to my Ultimate Growth Stocks newsletter went out earlier today to subscribers. My newsletter launched about 6 weeks ago or so, maybe 7 weeks at this point. At TFNN.com, you can get a free trial to Ultimate Growth Stocks right on the home page. I'm right in the carousel there, or you can click on the newsletters tab up at the top of the page, click on investment newsletters after that, and you can read about Ultimate Growth Stocks. Try it free for 2 weeks. So, yeah, I mean, this is a good, solid day taking shape for the market today. I've heard some people say as the day wears on here that this is a rally that can't be trusted. Remember, the last time we saw a really good sign of strength by the NASDAQ was back on May 31st, and we saw some good follow-through, a signal, a sign from the market that the trend may be ready to turn higher, but then it fell right on its face June 1st, and then more selling came into the market today. What's interesting to note, I have a chart of the S&P 500 up right here. People can take a look at that on Channel 1 on Tiger TV. But the S&P 500, as you can see, is 4 days into a rally attempt here. So if the S&P 500 were to strengthen into the close today, again, right now it's up about 1.4%. I don't think that's a big enough percentage gain to qualify as a follow-through day. And again, a follow-through day is just really a signal by the market that the trend could be ready to turn higher. Frankly, I'd like to see 1.7, 2% or more. So it's possible over the next 50 minutes or so we could see the market strengthen into the close. And it would also be possible that we could see follow-through today in the S&P 500, because this is day 4 of a rally attempt. The first day of the rally attempt, that's just an update for the market. That was, again, 4 days ago. You don't really want to pay attention to day 2, day 3 of a rally attempt, because a lot of short covering tends to happen in the market. But today is day 4 of a rally attempt for the S&P 500, and it's possible that we could see some follow-through today, which could be a signal that the market trend is ready to turn upward. It's also day 4 of a rally attempt for the Dow, and we'll take a look at the Dow Jones Industrial Average. Again, that is only up about 1.1% right now to 12,209. So again, you really want to see a follow-through day should really convey unequivocal strength, conviction. You want to see volume come in from the prior session. It looks like that's going to take shape. I mean, volume yesterday was very light on the NASDAQ. It was only about 1.68 billion shares, so I don't think it's going to be a tall order for NASDAQ volume to come in higher than that. I mean, average volume on the NASDAQ these days is about 1.9 billion, 2 billion. So looks like we'll get higher volume today on the NASDAQ. On the New York Stock Exchange, volume yesterday was 785 million. It's tracking slightly higher today as well. So there you have a look at the Dow. We took a look at the S&P 500 earlier. Let's take a look at the NASDAQ, and this is where there's a little bit of a disconnect in the market, because the NASDAQ, as you can see, is only 2 days into its rally attempt. So this is not follow through for the NASDAQ, even though it's up 2.2% and volume looks like it's going to come in higher than Monday. We're only 2 days into a rally attempt for the NASDAQ. Again, you want to pay attention to day 4 or later to see if we can get some follow through. But certainly the percentage gain in the NASDAQ, the abundance of leadership in that tech index today, that's a nice, strong percentage gain and very compelling action. So at this point where we stand, the only index that has a chance of following through today would be the S&P 500. So we'll see how things play out into the close. Just a reminder about my radio show, Breakout Investing with Ken Shreve. You can always find me on Channel 1 on Tiger TV at tfnn.com. You can pick the show up on iTunes and listen to it at your leisure. Just type in my name in the search box at iTunes, and you'll find the show that way. Or you can listen live on your smartphone at tfnn.mobi. And I've heard from a lot of people that like to listen on their phone. It's very convenient, very intuitive. Just click listen, and you can get the live stream. So the number to use to talk to me today is 877-927-6648, 877-927-6648. Let me know what's going on in your neck of the woods. And again, a 2-week trial to my Ultimate Growth Stocks newsletter, available right on the homepage of tfnn.com. Again, I do a weekly update every Tuesday, so my update went out earlier today, and I also send out email alerts in between. Buy alerts, sell alerts. I keep a model portfolio for my Ultimate Growth Stocks newsletter. I have been buying some stocks recently. They look pretty good right now. Some good outperformance today in the model portfolio, so I'm pleased with that. But really, still in the process of navigating a fairly tricky market here. It's on a day like today where there's a lot of green. Everybody is making money, but if you have stocks that are up 3%, 4%, 5%, I mean that's when you really start to outperform. And I have several of those in the model portfolio right now. Hopefully, the strength will continue, and we'll see this recent rally gain some traction. All right, taking a look at gold. Let's pull up a chart of the GLD. The GLD is the Spider Gold Trust, and I'll get that in just a moment. Okay, the gold for August delivery rose $4.40 today, or 0.3% to finish at $1,546.40 an ounce. Here's a look at the weekly chart of the Spider Gold Trust. Technically, I got to tell you, looks very healthy here. We've been talking about the technical strength of gold in recent shows. It's holding nicely above its 50-day moving average, and looks like it's close to breaking out over some resistance here, close to 152. So wouldn't be surprised to see a little breakout for gold, especially if this market rally gains traction. Silver for July delivery finished Tuesday at $36.38 an ounce, up 31 cents. Take a quick look at silver and see what that looks like. Clearly a different technical picture than gold. The iShares Silver Trust currently up 1.4% as we speak to 35.58. Still entrenched below its 50-day moving average, where it's been for several weeks. So clearly the potential for outperformance in gold seems to outweigh the potential for outperformance in silver. That's what the chart is telling me right now. Oil, turning to oil. August crude oil rose 54 cents to 94.17 a barrel. Hopefully stabilized oil prices and perhaps even lower oil prices going forward is going to alleviate some of the pain at the pump. That would be nice. So my overall take on the market today, good solid day for the market. We could get some follow through in the S&P 500 stocks in my model portfolio. I'm happy with the performance up to this point. Would really, I'm trying to set up a model portfolio here, and I started it in late April, sort of early May, right when the pullback in the market started happening. So I've been treading very, very cautiously. My model portfolio at one point held 16 stocks. This was several months ago, but when I relaunched the portfolio in late April, I started taking profits. I got out of names like Apple. I got out of names like Priceline. So right now the portfolio has about 8 stocks in it, and I'm really looking to increase that number, but I'm not going to do it until I'm fully convinced that the trend has turned upward here. We'll see how things play out today, and if we get some follow through in the S&P 500, I will continue to nibble and most likely add some stocks to the portfolio. In economic news today, let's take a look at some headlines. Existing home sales for May came in at 4.81 million units, down slightly from 5 million units in April, but mostly in line with expectations. Home builders were doing pretty well on that news. Also, the situation in Greece still very fluid. Later today at 5 p.m. Eastern Time, the parliamentary vote of confidence will take place as the country tries to muster up support for its economic reforms. Again, that's going to go down at 5 p.m. Eastern Time today. Greece is expected to get its next quarterly installment of bailout money in mid-July, as long as the country passes more austerity measures. So I think the rally in the market is anticipation of hopefully good news coming out of Greece today at 5 p.m. Eastern, when the parliamentary vote of confidence takes place. In related news, the International Monetary Fund, the IMF, said Spain can't let up on the reform measures that it's taken. It needs to continue. Spain cut its deficit to 9.2% of GDP from 11.1% in 2009. Spain is aiming to cut its deficit to 6% of GDP by the end of this year. Elsewhere, J.P. Morgan Chase added about 1.2% to 40.95. Let me go ahead and get an updated quote for J.P. Morgan. Just see what's going on there. Update my chart. So J.P. Morgan, now up about 1.2% to 40.96. Earlier today, the company agreed to pay $154 million to settle an SEC lawsuit on complex mortgage securities. Turning to earnings news today, Walgreens, not a good day. The earnings weren't too bad, but the stock price performance isn't good today. Walgreens, ticker WAG, dropped 4.3% to 43.24. We'll pull up a chart of Walgreens here and take a look. Again, the story here was earnings. Earnings up 22% from a year ago to 66 cents a share. Sales up 7% to $18.4 billion. Prescription sales accounted for 65.1% of sales in the quarter. But the story here, the reason why the stock is having such a rough day, is that the drugstore chain said it will stop filling prescriptions for customers covered by drug benefits manager Express Scripts. That's ticker ESRX. The two companies failed to reach an agreement in contract renewal negotiations. So Walgreens, the earnings numbers weren't too bad, but investors not happy with this news about Express Scripts. Shares again down 4.2% to 43.29 with about 45 minutes left to go in the session. Also, earnings, let's take a look at Carnival. That was another company that reported earnings today. Carnival has really been beaten up in price. This is not typically the type of stock I would target for my Ultimate Growth Stocks model portfolio. It's still about 23% off its high, even though the stock is up about 4% today to 37.08. A lot of bad news priced in here. The company has been dealing with rising fuel costs, instability in the Middle East and North Africa, as well as the aftermath of Japan's earthquake. Quarterly profit down 19% to 26 cents a share. Sales up 11% to $3.6 billion. We'll be right back, folks.
Tiger University's Tiger Trading Tracks is your blueprint to building a solid foundation of comprehensive trading tools. An in-depth educational program, Tiger Trading Tracks features a step-by-step process for understanding the markets and creating success strategies for your trading. The Tiger Trading Track journey will prepare you to adapt and develop a personal trading and investing strategy that will perform best for you. While you can't control the markets you trade, a Tiger Trading Tracks education will allow you to understand your personal trading and investing needs and what markets are best suited for you. Now is the time for you to travel your path to financial independence. Follow your Tiger Trading Track to trading and investment success. Go to tigeruniversity.com and click on Tiger Trading Track in the navigation bar. Choose the course that most interests you and begin your education today.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Ken Shreve with you. Breakout Investing with Ken Shreve on the TFNN Radio Network. I wanted to take a look at just one more headline today before we get into some of these good growth names that are outperforming the market nicely today. Wanted to take a look at Discover Financial Services, ticker DFS. Shares were recently trading up close to 2% to 24.08 after Macquarie and Company upgraded the credit card issuer to outperform from neutral. I rarely pay attention to analyst opinion about a stock. I tend to just do my fundamental analysis and do my technical analysis and make my own decision about whether a stock is a buy or a sell, but Discover is benefiting from an analyst upgrade today. It's interesting. I like these upgrades that tend to come ahead of earnings reports or very, very close to earnings reports. Discover is set to release earnings before the open on Thursday. The consensus estimate is for profit to jump 106% from a year ago to 68 cents a share, with sales up just 2% year over year to $1.7 billion. Again, on Channel 1 and Tiger TV, you can see a daily chart of Discover Financial Services, and this is a classic example of a stock that is in the process of building a base. It climbed above its 50-day moving average today. It started to It started to correct in price back in late May, so it's in a consolidation, and it's in the process of building a base. I generally don't like to buy a stock as it's building a base. I like to see the base complete and then wait for a heavy volume base breakout. So while Discover Financial Services is acting pretty well ahead of earnings, I would rather wait for this stock to finish building its base and then think about doing some more research on it and thinking about buying it again on a base breakout. But this is still building a base here, and I've always found it just riskier to buy a stock as it's building a base as opposed to focusing your buys when a stock has consolidated fully and then stages a breakout. Here's a good example of what I'm talking about. Oil refiner Holly Corporation. I have a chart saved for Holly Corporation here. We'll take a look. This is a weekly chart. Shares of Holly were recently trading around 67.07, up 4.1% on the day. But this is a good example of a base breakout taking shape today. Okay, Holly Corporation started forming its base in early April. Its prior high of 66.55 was right over in this area here. And Holly Corporation is just an example of a good breakout. Its prior high was 66.55. Stock is trying to break free. It hasn't fully done it yet, but there's been good volume in the stock in recent weeks. This is a typical example of a chart structure that I like to target my buys in my Ultimate Growth Stocks model portfolio. When stocks move, they tend to move in groups, and the refiners have really been moving as a group. And Holly Corporation is arguably the leader there. Frontier Oil, ticker FTO, is another stock that is forming a good base as well. In fact, we can take a look at FTO real quickly, see how that's doing today. Frontier Oil shares recently trading around 32.14. Very similar looking chart to Holly Corporation, another breakout taking shape today. All right, I wanted to take a look at Lululemon. This is we turn to sort of the aggressive growth part of the show, and Lululemon, again, a former holding in my Ultimate Growth Stocks model portfolio. Lululemon reported earnings not too long ago, and I decided to take a gain in the stock ahead of earnings. I still don't regret the decision. I do not own this stock currently, but shares up nearly 5% today to 102.39. And again, sold it for a nice game. Still could work. Earnings story very much intact here. 2011 profit expected to be up 39% from 2010. Earnings up 23% in 2012 when compared to 2011. Lululemon today is trying to break out over its prior high of 102.83. It's doing it. Shares are around 103.11 right now. This is a stock that could attempt an upside breakout. It's going to have a better chance of succeeding if we ultimately get some follow through in the market. I'm going to go to Dominic when I get back from break. I only have about 40 seconds left, so let's just take a quick look at Body Central. This is one of my favorite retailers. Again, this is an example of a stock that is in the process of forming a base. Too early to buy in terms of my strategy. A lot of volume in Body Central today. Shares up over 8% to 21.66. It's a specialty retailer. Shows good growth. Trying to bottom here. Looks like it's going to be a good performance this week, but this thing needs to move higher. It needs to get back up towards the 25, 26 level, and then once it completes the base, I might be interested. We'll be right back, folks.
Tiger University and Bud Rolfs are pleased to announce Bud's new course, The Challenge of Channels, June 29th at tfn.com. In Bud's previous Tiger University webinar on the power of PTRs, Bud unlocked the visible horizontal forces of support and resistance called primary trading ranges. Now, he adds all the important visible diagonal forces of support and resistance called channels. Together, they can give you a comprehensive vision and understanding of the price movement never before possible. Stop flying blind in the fog of the marketplace. What good is a blank chart without the roads marked for you? With the knowledge Bud Rolfs gives you in his Challenge of Channels webinar, you'll go from lost and staring at a blank map to drawing the map on likely future stock price moves. Make the best investment possible, an investment for you. Go to the front page of TFNN.com, go to the center of the carousel, and click the Challenge of Channels. TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is an international gold mining company with 2 producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's highest-grade ore bodies being mined today. Burnstone offers a huge re-rating potential by producing in the 4th quarter, and Hollister represents a tremendous and very exciting exploration opportunity. With annual production of 165,000 ounces of gold in 2010, 260,000 in 2011, and 330,000 ounces of gold in 2012, Great Basin is poised to become a leading mid-tier gold producer. Great Basin Gold has resources of over 13 million ounces, exceptional organic growth potential at its current mines, and greenfield operations in Tanzania and Mozambique. Great Basin has strong management and a commitment to deliver exceptional value and cash flow to its shareholders while acting responsibly toward its surrounding communities. To find out more about Great Basin Gold, click on their banner on the front page of TFNN.com or check them out on the American Stock Exchange, symbol GBG.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway. Starting Tuesday, June 21st through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Welcome back, folks, to Breakout Investing with Ken Shreve. I know Dominic has been hanging on the line from Fort Worth, Texas. Appreciate him holding on. I'm going to go to Dominic right now. Dominic, how are you today?
Hey, greetings. I'm doing well, Ken. Greetings from Fort Worth. What I wanted to ask you is, I know every other Chinese company is basically fraudulent from what the news is saying. What are your thoughts on Baidu? Is it going down because of that?
Well, Baidu is my favorite company in China. I mean, there's a lot of great growth stories still going on in China, but I would call Baidu my favorite stock. I just think there's a management team in place there that is executing a growth strategy. Of course, Dominic, it got pulled down faster than the broad market because of some of these other negative headlines in China. Excuse me, recently, and plus the fact that the economic growth in China is an issue that the market is sort of evaluating right now. I mean, the economy is probably going to slow. Is it going to be a hard landing? Is it going to be a soft landing? But overall, I really like Baidu a lot. I just think they're well positioned for growth. I mean, you're talking the internet in China, and that's not going away, and they're right there in the middle of that growth.
Do you think it's going down because of every other Chinese company being fraudulent, basically, from what the news is saying?
Well, I mean, it's not helping. You know, I mean, that's one reason. I mean, when you know, but again, the institutions, a lot of the U.S. growth fund managers that own Baidu, I know that even though the stock has been hit hard in recent weeks, there's still a lot of fund managers out there that have you know, a good position in this stock. So you know, the China fraud that you've been hearing about, a lot of this is happening with just much smaller companies and not nearly companies that are the institutional quality of Baidu. So I think it'll come back. I'm not sure about many of the other China names, but I still like Baidu. I'm going to let it kind of trade for a little while longer, see if it can you know, start to eventually retest its former highs. But you know, it's having a good day today, up about 7%, and there's some volume in there as well.
Hey, thank you, Ken. You have a good one.
Okay, thanks, Dominic. All right, that's Dominic asking about Baidu, and you know, that's a good point. I mean, the China stocks have been affected negatively by sort of a whirlwind of headlines. There are, you know, the China, you know, the fraud issues that are enveloping a lot of companies there. But remember, there are institutional quality stocks in China, and there are non-institutional quality stocks in China. And Baidu is clearly the cream of the crop. Fundamentally, you know, technically, it recently found support at its 200-day moving average, but I suspect that if you ask, you know, a lot of institutional investors in the U.S. who is the highest quality, you know, China stock out there right now, it would be hands down Baidu. They're just you know, they're a China search engine, and fundamentals are there. The thing about Baidu, I mean, this is another stock. It's selling at 70 times trailing earnings and 32 times forward earnings, but keep in mind that annual earnings this year are expected to grow 69% compared to 2010, and they're expected to go 50% in 2012 when compared to 2011. Return on equity of 50%. You know, all that said, I mean, it's made a huge price gain. Remember, this at the start of the bull market in March 2009, Baidu was you know, $17 stock, $20 stock, and now it's you know, $127 a share. So finding support at its 200-day moving average, it could rally along with the broad market. I'm not a buyer here, but it's still it's a fabulous company. Okay, so that was a good question about Baidu there. Also wanted to take a look at let's take a look at Whole Foods Market. Whole Foods Market. We don't have much time here, but Whole Foods Market has some pretty bullish things to say about business for the rest of this year. They're targeting a lot of expansion in Canada, but shares of Whole Foods Market recently trading around 60.29, up 8.25% for the week. Stock having a very good day. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks, to Breakout Investing with Ken Shreve. A little more than 15 minutes left to go in Tuesday's session. Let's take a look and see where we're at. The Dow now up about 106 points, 0.9% to 12,186. NASDAQ continuing to outperform, up nearly 54 points, 2% to 2683. No follow-through for the NASDAQ yet. We're only 2 days into a rally attempt. The NASDAQ came about 10% off its recent high. The first day of its rally attempt was yesterday, so this is day 2. This is a good, solid percentage gain. Volume, okay. I mean, it looks like it's going to be up about 10% from Monday's levels, which were very light, as I mentioned earlier. Volume on the NASDAQ yesterday was I think it was 1.68 billion shares, which was below average. And the S&P 500 off its highs, not by much. It's up 16 points, 1.25% to 12,094. So, we may get follow through today in the S&P 500. We may not. It doesn't matter. It, I think really the market is going to be paying a lot of attention to what Fed Chairman Ben Bernanke has to say at his news conference tomorrow. The two-day Fed meeting comes to an end, and I really find it hard to believe he's going to say anything that's going to roil the market. So hopefully his tone and the words that he chooses and his message will be soothing to the market's ears, and hopefully it'll fuel more buying. At this point, we'd like to see some follow-through in the market, and there's no doubt a lot of stocks out there acting very well today. Again, volume not overly impressive, but what else is new? That has been the case for several months now. Before we went to break, I was talking about Whole Foods Market. I didn't want to give it a short shrift. The company did make a pretty bullish presentation today at the Jefferies 2011 Global Consumer Conference. Co-CEO Walter Robb said the company expects to eventually have 1,000 stores in operation in the United States. That's up from around 300 currently. I didn't see a time frame there, but that obviously will take several years. Meanwhile, the company is seeing a lot of great opportunity in Canada, and that is a country that it is targeting for expansion. Whole Foods forecast pretty solid same-store sales growth for the current quarter, between 7% and 9%. So all in all, it was a very bullish presentation today. Yesterday, I believe on Monday, the stock got an upgrade from BMO Capital Markets to outperform from Market Perform. I really like Whole Foods Market a lot. I mean, this is another example of high-end retail, a company that just has been able to deliver pretty good bottom line and top line growth. Even when the economy was struggling, Whole Foods has a loyal customer base. Their food isn't cheap. They do natural and organic fare, and the prices are not cheap, but boy, they've got the bottom line and top line growth to prove that consumers continue to visit their store. So I like Whole Foods Market a lot. This is another example, one of many examples in the market right now of a stock that recently corrected down to its 40-week moving average. Again, on a weekly chart, I will refer to the 40-week moving average is really the same as the 200-day moving average on a daily chart. So I tend to do a lot of technical analysis looking at weekly charts. When I look at a weekly of Whole Foods Market, you can see the stock corrected off its high, recently firmed up at its 40-week moving average, and now it's trading right at its 10-week moving average, currently around 60.19. The stock is trading around 60.29, so pretty much right at its 10-week moving average. An example of a stock that is in the process of what looks like it's starting to form the right side of its base. So I'd like to see this get a little closer to 63, 64, 65, see if it can complete the base, and then before you know it, you could have an upside breakout on your hands. I consider Whole Foods a high quality company. Also wanted to take a look at Ulta, Salon, Cosmetics, and Fragrance. This is a stock that I've talked about recently, and I will say right off the bat, even though the stock is outperforming nicely today and has another really good track record of growth, shares were up nearly 6% to 62.14. You can see the tremendous price run this stock has made, and I just can't condone chasing it up at this current level. But these beauty store operators really have been going gangbusters, and they're going gangbusters stock performance-wise because of, again, it's usually earnings and sales growth that fuels price performance, and not only does Ulta have it, but there's an interesting stock in the group. Even though I think that Ulta, the train, has already left the station, it's too far extended in price, even though it continues to act well. Again, I can't justify a buy up at current levels, but there's another interesting competitor, a company called Sally Beauty Supply, and that is ticker SBH, and let me pull that up real quick. Company called Sally Beauty Holdings, and they're pretty much in the same business as Ulta, Salon, Cosmetics, and Fragrance, basically just a beauty store operator. You can see the much different look in charts here. Now, Sally Beauty actually had a good breakout recently. You see it broke out of a nice base right in this area here, and then it came down to its 10-week moving average for the first time, which is very common. Strong stocks normally find support there, and this one did. So this is an example of a stock that, in my opinion, is still within range. Stock recently took out its recent high of 1683, currently trading around 1744, only about 3.5% past its prior high. So just a quick technical analysis lesson here. Ulta, Salon, Cosmetics, and Fragrance, same industry group as SBH. One has just gone up a tremendous amount, continues to trade well. That's Ulta. Another strong SBH, Sally Beauty Holdings, is also a strong price performer, but this is one that just recently broke out of a base and found support at its 10-week moving average. So I think a good case can be made that the train has not left the station yet with Sally Beauty Holdings, SBH. This is not a small speculative stock either. It's a company with a market cap of just over $3 billion, and again, a good record of earnings and sales growth in recent quarters. Also wanted to take a look at Under Armour in the I guess you could call that in the retail sector. Under Armour. Let's see where I know I have Under Armour here somewhere. There it is. Okay, taking a look at Under Armour, shares up, trading around 74.55, up 4%. Another good example, folks, of a base-building stock here. I like the way Under Armour looks. This is probably not that far away from completing a proper base, a good cup-shaped base. You can see the start of the consolidation over here. It's getting close to its former high. I like the technical picture here very much. This one is on my watch list. We'll be right back, folks.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What's the single force that controls the quality of our trading? What's the one power that we have right now that at this moment could change everything and anything in the way we trade? We all know the answer. It's the power of choice. Join me, Steve Rhodes, this Wednesday, June 22nd at 6:30 p.m. for a free 30-minute webinar, Celestial Charting, a Study in Probability. I'll share with you a trading strategy that has produced a better than 70% win-loss rate during the last 9 months. I will teach you how to use the moon's phases combined with other pattern recognition techniques. More importantly, we'll combine the power of money management and how to set up the trade. Look, I don't know how electricity works. I just know it does, and I couldn't live without it. This is one trading strategy that you don't want to live without, and it's yours absolutely free. Sign up now on the homepage of TFNN under Breaking News. Celestial Charting, a study in probability, are what help you to know the road ahead as clearly as you can see the moon in the sky.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Vista Gold. For more information, just click the Vista Gold banner on the front page of TFNN.com.
Welcome back, folks. About 5 minutes left to go in Tuesday's session. The Dow up 121 points, 1% to 12,201. NASDAQ getting a little stronger here, up 58 points, 2.2% to 2687. And the S&P 500 up about 18 points, 1.4% to 1296. Looks like volume is going to come in a little bit higher than Monday's very light levels. Not even sure it's even going to be average today, though. So even though it's likely going to come in higher than Monday, it's going to be tough getting 2 billion shares on the NASDAQ and 1 billion shares on the New York Stock Exchange. But hey, we'll take the gains today. A lot of strong movers. Also wanted to take a look at Chipotle Mexican Grill. I really have mixed feelings about this stock because on the one hand, it's just so darn strong. It's really not doing anything wrong. Shares were recently up about 3% to a little more than that now to 285.63. This is just a strong performing restaurant stock. It really doesn't do anything wrong. Quarter after quarter, it just reports great growth, and margins under a little bit of pressure due to higher food prices, but this company continues to do very well. So I just have mixed feelings about the stock because it's a tough stock to bet against. What I most don't like about it is just the huge price run it's made over the past couple of years. I mean, stocks can ultimately form what are called late stage bases, where they break out of one base and they break out of a second base, a third base, a fourth base, and pretty soon it just gets kind of long in the tooth. It's already on everybody's radar, and I have to think that Chipotle, if it's not there right now, it's getting very close to that level. It's not doing anything wrong. It continues to hold near its highs, but this is a stock that I'm probably going to avoid for the time being, just because I just think, like, similar to Netflix and even an Apple. I know it's blasphemy, but I think that the big money has probably already been made in these stocks. So. Coming up after the close, we have earnings from Adobe Systems and J-Bill Circuit. Let's take a look and see what Adobe is doing ahead of its earnings report. Shares of Adobe Systems doing well today, outperforming, up 3.3% to 31.98. Boy, this is a stock that looks a lot like the NASDAQ, doesn't it? It's just been obliterated in price. A good rally on Monday, another good rally today, but still a lot of technical damage in Adobe Systems. The estimate is for earnings to rise 16% year over year to 51 cents a share, with sales up 5.5% to almost $995 million. We also have earnings from J-Bill Circuit. We can take a look at J-Bill Circuit, and this stock is also up 3.3% to 1887. Same type of deal. You've got two tech stocks here that have really been hit hard in recent weeks. Still a lot of tech stocks out there, despite recent weakness in the NASDAQ, that aren't doing that poorly. A lot of charts that look a lot better than Adobe Systems and J-Bill. But both of these companies are expected to report after the close. J-Bill is expected to earn 57 cents a share. That's up 43% from a year ago, with sales up 20% to $4.14 billion. So pretty good growth expected there. Don't forget about the Fed meeting tomorrow. This is going to be a big one, no doubt. Investors are going to be listening very closely to what Ben Bernanke has to say. The statement will be out at noon Eastern time, and the press conference is at 2:15 p.m. Eastern. Coming up later this week, weekly jobless claims. We also have another big piece of economic data. That's the first reading on, not the first reading, the final revision, to first quarter gross domestic product. The last estimate was for was 1.8% growth. This time it's really going to be unchanged, also at 1.8%. Coming up tomorrow, earnings from FedEx. They're expected to earn $1.72 a share versus $1.33 a share, with sales up 11% to $10.42 billion.
Great Basin Gold is an international gold mining company with two producing mines in the world's most prolific gold mining areas, the Hollister Gold Mine on the Carlin Trend in Nevada and the Burnstone Gold Mine in the Wits Basin in South Africa. The Burnstone Mine is a low-cost, long-life, shallow mine that is a company builder, and the Hollister Mine is one of the world's